it's not going to put us out of business. Trust, as an accountant, as a tax professional, it's not going to put us out of business, but it will make you a stronger small business owner. And what's up, beautiful people? It's Tashima again. Now, if you are new to business and you're like, I don't really have the money to be paying for a CPA or to be paying for a bookkeeper or whoever. I don't have the money for that yet. Or maybe I'm just not ready to invest my money into that. And you're like, you know what? I want to do this on my own. If you can be disciplined, if you can be consistent to do your own accounting, your own bookkeeping, do it. I am going to go through with you on if you can and if you can't. So stay tuned. I want you all to keep in mind that if you are new to this, if you really don't fully understand what bookkeeping is or what accounting is, you could honestly do more damage than harm, if I'm being completely honest. So you want to make sure that you have some type of understanding of what you need to be doing and how you need to do it. For example, there are a lot of people who start off and they're like, I can easily categorize. Categorizing is only the first part. There are so many other things that you have to do in order to accurately do your bookkeeping. So if you're doing that part wrong, you honestly could hurt yourself in the end, and it may be something that you want to get some assistance with. If you are willing to be consistent and do this thing month to month, not take a month off, not take a quarter off, you are going to do it every month, and you have that consistency to do it, by all means, do your own bookkeeping. It will save you money, but I will also tell you, if you take a month off, or worse, you take a quarter off or 6 months off, it is going to be so overwhelming and so difficult for you to catch up and get everything back in order that you're going to be discouraged and you're not going to want to do it at all. And in the end, you end up not doing it. I am not saying this because I am guessing or playing a hypothetical game. I see this all the time. This is a real thing. So if you know you lack the consistency, get some help. So if you're going to go ahead and you're like, you know what? I got this. I know a little something about bookkeeping. I know a little something about accounting, and I know I'm consistent. Then I want you to do 3 things. First, I want you to start off by doing your chart of accounts. This is where you create the things that are ordinary to your business. So this could be basic. You can keep it basic. There are already basic ones in there, but if you want to make it specific, make it specific. So for example, my revenue, my sales, they don't just say revenue and sales. I have mine broken into the different money buckets that I have. Tax income, bookkeeping income, cleanup income, QuickBooks training income, whatever it may be, consulting, whatever it may be, I have that categorized specifically. So my chart of accounts is going to look a little bit different from someone who's doing marketing consulting, or from someone who has an HVAC company or something on the lines of that. So start off by doing your chart of accounts so that it looks specific to what you do and what your business is. Next, go through and categorize everything. You can't miss anything. If it's something where you spent something solely on yourself, put it in an equity account. We'll worry about the rest later, but put it in an equity account. You want to make sure you categorize everything, and you want to make sure that you're doing it properly, because sometimes we get in a rush and then we do things wrong and we put certain things in the wrong place. Do it the right way, because this will ultimately help you when it comes to your tax deductions and paying minimum to zero in taxes. Lastly, you have to reconcile your accounts. So what does this consist of? This is you taking those categorizations that you have, getting your bank statement, and comparing. It's that simple. If you get a QuickBooks account, reconciling is one of the most easiest things that you can do. As long as you have that bank statement, you will be good to go. But please understand this. Let's just say, you say, I categorized everything, so it's all good. If the IRS asks to audit your taxes, or if someone comes in and they want to invest in your business, your accounts not being reconciled means that they're not credible. And that is where a lot of you all mess up. So be sure to follow each step. Start with your chart of accounts. then go into categorizing, and lastly, do the reconciliation to your actual bank accounts or your credit cards. That is how you're going to do your bookkeeping on your own. So if you're able to be consistent, if you're able to have the know-how to do it, do it. It'll save you money in the end. It's not going to put us out of business. Trust, as an accountant, as a tax professional, it's not going to put us out of business, but it will make you a stronger small business owner. And the ultimate goal here on my channel is to help get you to a point where you are a strong business owner and you are starting a big business that is going to employ lots of people and change lots of lives. So thanks for joining me. Make sure you subscribe to my channel, like and comment, and check out what YouTube has to offer you next. Peace out.